Ladies and gentlemen, K Kim here with the Traders Club. Today, we're going to do a special report. Market has plunged about 12% in about a week, a little over a week. And I believe this is the fastest decline ever in history, right? So we've never seen a 12% decline in, this short period of time. And so, obviously, these statistics that people always come up with, I remember in late 2000, I think this was before Trump was elected, right? Like late 2016. I think it was like late October, early November, late October, something like that. I remember the headline. I remember that what everybody was talking about, on Twitter and social media and things like that. Even on TV, they were saying something like, this is the longest, the longest drawdown or something like that, or consecutive losses since 2008, right? So they always come with these headlines, like, since this, since that. It's just because it's obviously because these TV stations, this prominent media sources, their job is to get your attention. So when they say something like, this is the longest losing streak since 2018 or 2008 financial crisis on Dow, it's gonna get your attention. There are other ones I forgot. Like I think late 2018, right? December 2018. There are other headlines. This is the worst losing streak of something since 1987 or something like that, right? So I remember. Do you guys remember what happened? Late 2018 December, we saw a 20% plunge in just about a quarter, a little over a quarter, like three months, right? And that was also another huge event that occurred and really spooked everybody, pretty much everybody in the world, right? And so many people convinced that was the start of a recession. I still remember 2015, 2016, right? So 2015 and 16, people were calling for global market meltdown. Global. We're not just talking about recession in the US, man. We're talking about global market meltdown. I remember even people went as severe as saying that your cash is going to be worthless. People are going to be using your cash to generate heat. Like basically what they're saying is like cash is going to be worthless. So, because of the debasement of currency, and people are going to be using cash to generate fire, right? I mean that's obviously people just saying that stuff like that. And so what I'm trying to get, and also same thing, like you guys remember 2012, somebody said talking about how Spider's going to go to like 60, S&P 600, and 2013, 14, 15, 16, 17, 18, 19, 20. I mean, please. Don't you? Some of you guys have been following me since like 2014, right? I think I started doing my YouTube videos since 2014, right? Why do I have to always repeat myself every time there's a steep pullback? Why? I mean, seriously, you go out there, watch these robots on YouTube. They all sound like they all sound like robots, right? Don't they? I mean, go watch these people. Like I'm like talking to you as a people, like you're next, like we're friends. Go listen to these bozos out there on YouTube, right? They sit there with these monotone, like, oh yes, because of this, and this, and we gotta be, this, and you know what I'm saying? Like basically, when the market is going up, it's bullish. When the market is going down, it's bearish. It's like, oh, bullish, it's bearish, bullish. See, if you do that every single day, you never, you know what I mean? You never have to face to be wrong, right? Market is gone. It's like, oh, this is because of this, because of that. Yeah, let's stay bullish, my friends. Let's stay bullish because you know what? Trend is up. Trend is your friend. Ooh, hoo, hoo, hoo. And then when we see a big decline like this, oh yeah, there's with this coronavirus and all these things that were the market is already now all of a sudden market is already extended, right? The same Bozo who said the trend is up, trend is your friend. Now there's a market is extended. Let's talk, right? I'll talk to you, and I always do. Like I'm talking to my friend. Like you're sitting right next to me. Let's talk. Like, have you ever have you ever called like customer service? I don't know, for your QuickBooks or for I don't know, for your event, whatever, like customer service or bank. You're trying to call a bank like Wells Fargo, like a big bank, Wells Fargo. Gotta go through all these hoops, right? Or like some guy just calling you, like some telemarketer. They all sound like robots. I'm telling you, because they all got these, this template they're going off of. One time I was so pissed that I actually told him, "What's your name?" He's like, "My name's John." And then he kept going on and on about other shit, right? And I go, John, no, stop. Can you stop reading off of your stupid template in front of your screen? Talk to me like a person, okay? These are my problems. I need you to help me. Don't tell me about your stupid policies and all that bullcrap. See if there's any other way you can talk to me like a person. He won't. He just can't go off with them. And then there are people like that on YouTube, like those sound like robot people. And then there's this fake, fabricated excitement manufacture videos where people just create this fake excitement, a fake hype. Because the reason I'm telling you these things is because you can't even distinguish what's real and what's fake. You cannot able to, navigate through the market. Because there's so many shenanigans happening in the market. What it looks like real, what it looks like fake. I mean, just look from 2009 until today, how many corrections and pullbacks and shenanigans we've had. In every pullback, everybody thought the crash was going to come, right? That's what I'm trying to get at. If you can't not define, right, what's real and what's fake, right? Market fools the majority, therefore the majority follows the fool. Right? I've been navigating this market since early 2016 correctly on every turn. I was maybe not able to correctly predict pullbacks, but I was able to navigate through it on every turn since 2016 lows, pullbacks throughout. I called 2018 January plunge, that 12% plunge. I was able to see that coming. And then late 2018, I did not see that 20% correction coming. However, I was able to correctly predict the V-reversal prediction going back up. I did not see this 12% correction, but I believe we are, getting near to bottoming here. I don't know exactly how it's going to bottom. I'm leaning towards maybe another V-reversal, just how fast it came down. But let's get into it here. I want to start with this quote here from John D. Rockefeller: "The way to make money, to buy when blood is running in the streets." Like everybody knows this. Like everybody knows all the sayings, all the cliches of the market. Knowing is nothing. You doing is what's hard, right? We all know what Warren Buffett had said, be fearful when others are greedy, be greedy when others are fearful. You've probably even seen this kind of, quotes everywhere on Twitter. But reciting, sharing, remembering is nothing if you cannot practice. Because doing it is the hardest part, right? The way to make money is to buy when blood is running in the streets. It's easier said than done. practicing this is extremely difficult. It is the most terrifying thing to do. I mean, can you imagine buying, right? When blood is running in the streets. Can you imagine buying that? Be fearful when others are greedy. Be greedy when others are fearful. Right now, people are fearful. Is it difficult to be greedy right now? Yes. It's also very difficult to be fearful when others are greedy. Because remember I said this, and I mentioned this in many videos before, because you've been conditioned, trained since you're young, you're a little kid, to save when there's a deficiency. When you experience a deficiency in your account, in your bank account, you've been trained to be defensive, you've been trained to be fearful, and you've been trained to save. But there's a surplus in your bank account, you go buy. You go out to eat, you buy clothes, you buy toys, right? The rent is coming out, your bills are due, you're not going to get paid another month or so, or a week or so. What do? You're experiencing deficiency in your account. What do? You save. You don't buy. What is he telling you to do? The way to make money is to buy when blood is running in the street. So when you're in the most extremely deficient state, you gotta buy, right? Because it's very, very difficult. Because there's a fear of potentially recession hitting, right? There's fear maybe your company you work for might go under. You might even lose your job, right? You might lose your house. You might lose your car. But what is this guy saying, right? We all know who Rockefeller is, right? The way to make money is to buy when blood is running in the streets. Extremely, extremely difficult thing to do. This is a reason why only few will ever find it. Only few will ever survive. Only few will ever truly make it in the stock market. There will be people coming and going. There will be people coming, hitting some lucky shots here and there, but sooner or later, they will be wiped out. 90% retail traders all go broke. Only top 10% makes it. All the social media people are liars, every single one of them, because Facebook is a liar. I mean, people use Facebook. So remember all those people, right? All the smiley faces, all the great poses, the little 1 split-second snapshot of their life. It's all fake. It's not real, right? That's what social media is. It's fabricated, manufactured joy. Everybody loves to be envied. Everybody loves to be, be liked. Everybody likes to show off. Look at me, what I'm doing. Look at me, what I can do. It's because they're babies. Babies do that. Kids do that. You know what does the kids do? Oh mom, look what I can do. Look what I can do. Look what I can do, right? That's what social media is. Look what I can do. Look at this, look at that, look at my car, look at this. They've never grown up. I mean, I know we haven't even gone to the charts. We haven't even gone to, this is just very, very basics. What I'm saying is you have to be a grown-up person, right? There are people who are 30, 40, 50 years old. They're still not grown up. They're still acting like a little kid. This market is for grown-up people, not for, you know what I'm saying, for a kid, not for a boy, not for a girl. Every little pullback we have, you start freaking out and panicking for some reason. This is different. How many years you've been saying that? And I'm not saying that, oh, wow, okay, I guess you just know this is gonna, this coronavirus is not gonna kill the market. I guess you just know because you're God, right? You can see no, that's not what I'm saying. I'm not God. I'm a feeble man just like you are. We're all feeble people. We can die anytime. We can die because of cancer. We can die because of fire. We can die because of car accident. We can die because airplane accident. We're very feeble people, fragile people. If you just walk and you fall, you're dead, right? What I'm telling you, what I'm about to show you is probability. right? Strategically looking at the market in a probabilistic way. Not jumping into a conclusion just because we're seeing some, fast plunges in the market. Because if you actually study the market history, we see in a great bull market, you're going to see sharp pullbacks along the way. Just look, December 2018. All right, so let's get into it here. I'm going to start with first slide. We got the Nasdaq here, Nasdaq weekly chart. I've done a report, or I wrote an article early last week, right? Or early this week, regarding Dow Jones Industrial Average, right? In that article, I talked about why I believe that massive rally is coming. But I don't have to show you, pretty much all the indices have pretty similar look here, but Dow has the most constructive look. Most constructive look. Because you think, people have been saying that we're in another bubble, like another tech bubble. But actually, on this recent plunge, Dow's been holding up, the Nasdaq's been holding up the best out of all other indices, right? The Nasdaq's been holding up the best. So this is a weekly chart. I think I screened this, midday yesterday or something like that, but I think we're similar somewhere here. I know we did see market bouncing like last second. And so, so basically, this is a very, yes, it does look worse when you look at S&P and the Dow and other indices. I just want to make that clear that Nasdaq, when you just look at this Nasdaq on a week, this is a very, very normal looking, healthy pullback on Nasdaq. Like I said, I'm going to say it again. It looks worse on the S&P, on the Dow, right? On the Nasdaq, it looks completely normal. This is completely normal. Like we go up, this kind of size of pullback, it just happens so fast. That's what freaking everybody out. And I'm going to get into it later in this presentation. If the market took its time, normally that's what it does. Maybe it took another week, because this is a weekly chart. Even like back in June, I think, it took 1, 2, 3, 4, 5, like 6 weeks, like month and a half. Nobody really freaks out as much. They were still freaking out here, though. I still remember. People are still freaking out here. But not as much when market takes its time to pull back, right? But when we see a 1 week plunge, people just lose their mind. Because it's moving so fast, coming down so fast that they think it's going to continue in that. It's actually the opposite. It's actually the opposite. Remember how kind of slowly went and then it got faster and faster? Remember in late 2018, how fast that last decline was and how quickly it got resolved to the upside. A lot of times, it's also you have to understand, trend gets developed over time. 1 day move, 1 week move does not dismantle a trend that has been built for the last years, over the years, So anyway, so basically this is what I call rising pivot, right? This is a prior resistance. We had a big breakout. This tells us to never chase. And I told you, and you guys know this, right? Never ever chase. So most people, and it's true, most people did not buy it here. Did not buy it here, here, here. They started accumulating when they thought the danger was going to subside. They want to wait. They're going to wait on the sideline. They're going to wait until the dangers. I've been talking about this pretty much throughout the years in 2019. You guys remember this? People don't want to buy it here because they're scared because we got a big plunge. They thought crash was going to come. So they're not going to buy. They're usually going to close out their long somewhere here with loss. They're going to say, you know what, I'm going to wait until this quote-unquote danger to subside. And you guys know that I bought this dip pretty heavily. Anyway, so they're going to get out here, right? Market is going to make a move. And then when market goes straight up, well, you're scared now. You're scared now. Like you're scared when it came down, but you're scared when it went up because now it went straight up. So you're like, okay, on the next, it's difficult for them to go full-blown bullish when market just went straight up because you don't know when the next pullback is going to come. And then when actually pullback came, you're like, oh, I don't know. And then there's a lot of like bad headlines. You guys remember back here? It wasn't easy either. It's never easy. There's always something going on. You know, I think it was like the China trade deal and all that, the Trump, the interest rate, all that stuff was happening, and it made a lot of people fearful. And I think a lot of people are kind of wondering about, okay, well, I want to make sure we break out of it. First, when we break out, then I think that's what most people are thinking. And then from here to here, almost like it seemed like from October lows till, you know, February, mid-February, it just went straight up. It's almost like the market has been going up every single day, right? Most retail traders, maybe even a lot of hedge funds, right? They might have went long, chased this up here instead of risking it down here. They chased it up here. Now they're blown away completely, because when you chase, market will punish you. And if you've been listening to me, I've been telling you that almost every video. Do not ever chase. I don't ever chase. I chase nothing. I don't chase stocks. I don't chase fame. I don't chase money. I don't chase women. I don't chase high, right? I always wait for the right setup, except for the part high. I don't do drugs. So I don't chase. I don't wait for right setup for being high. This is the reason why, like, because once you chase, I've said I've said this before to you guys, that once you chase anything, it doesn't matter if it's stocks or women or high money, whatever. Once you chase anything in this world, you give away the right to control. Let me prove this to you. So let's say you're chasing a high. Once you chase the high, you keep chasing and chasing. What happens is now that high got you. The high is controlling, because you cannot control yourself, right? Think about it. When you get any kind of addiction, what happens is whatever the addiction that you chased, now that addiction got you. You don't got it, because you gave away the right to control. So then addiction controls you. The high controls you. You chase the women. Women controls you now. Many of you guys know exactly what I'm talking about. You chase this girl, right? You chase this girl, like, you know, she wasn't really interested in you, but you kept chasing. Finally, she gave in, though. So you're very, very happy about that. But throughout the relationship, you have no control over her. She has control over you and your life. You guys out there know exactly what I'm talking about. Same thing happened in the stocks. You chase Apple. You chase stocks, whatever. You start chasing it. Every day you live your life with misery, because you're scared every day what that stock, because you chased it. Right? So don't chase. Wait for the right setup. So that's that, right? And that's, I think, weekly. I forgot what moving average it was. Apologize, but I'll find out, and maybe I'll tweet things or something like that. But we got the Fibonacci here, from here to here, the first level fib. So we got that kind of, you know, this is a kind of a strong pivotal level, because we got the moving average in that vicinity, and we got that fib. First level of my fib is hitting that level. Am I saying that this is going to be absolute bottom? I know exactly this is going to be bottom, V-shaped higher, go to 11,000. No, this is a level. Do pay attention. We may come down to the next level here, but it's a vicinity that I believe is going to be a strong support, right? It's going to be a strong support. And as I've been tweeting it out, I've been buying dips pretty heavily this week, right? This week, Thursday, I bought quite a bit, and just as I did in late 2018. And I told you guys that even up here last couple of weeks, I have a cushion, because ultimately I became a long-term investor in early 2016. So there are a lot of stocks that I accumulated since early 2016. But what really got me to achieve what I've achieved in 2019 as far as performance is concerned, all my trading performance is, displayed on my website at twotradersclub.com. But there's a reason why I achieved what I've achieved in 2019 is because I was long here heavily when there was a maximum fear. I mean, Compared to today, 2018, late December 2018 was much, much worse. And it was a much more dire situation, I have to say. Today's much, much better environment as far as long-term trend is concerned versus 2018 December. So I have a much more cushion. And it sucks to, you know, and also, obviously, you guys know that I close out my TQQQ calls here. And as I've been telling you in my, you know, market update videos last several weeks, that I've been trimming. I've closed most of my Apple shares, and you know, some of the shares that, some of the stocks that has been extended, right? Those I close up. But some of my long-term investment positions, I'm long on everything. And I've closed like, you know, 1/3 of my triple shares on SPXL, TQQQ, and stuff like that. And but with the recent plunge that we're seeing, I reloaded my triple shares also. And I was out of my spider calls, QQQQ calls on top here as well, and TQQQ. You guys know I did the journal post on TQQQ, and I was out of that like several weeks earlier, a couple weeks earlier. So I was trimming and stuff like that, and I also told you guys if we were to see a big decline, I have a cushion because I didn't chase it. That's the difference. I have the right to control now because I didn't chase this. You see what I'm saying? So I'm not saying that this is like ultimate bottom. That's not what I'm saying. As far as probably, because instead of buying it up here, it's much better to buy here. And this, after the huge run in 2016 through 2017-18, instead of buying it up here, it's much better to buy down here. That's what I'm saying. But again, it is very difficult to practice this. It's easier said than done. You see what I'm saying? It's easier said than done. Everybody knows this. Yes, the way to make money is to buy when blood is running in the streets, right? Be fearful when others are greedy. Be greedy when others are fearful. But practicing it, actually doing it, is the hardest thing. Technical analysis is fascinating because a lot of it is actually like a psychological analysis that is embedded in technical analysis. Because, I mean, what is it? What are we seeing? Do we have some kind of machine like moving the stock market? No, this is us. This is all you and me, all market participants in the world is printed on this graph. This is organic. It's us. It's our fear and greed demonstrated in graph form, right? So it's not just price. It's not just me drawing this obscure lines, hoping that's going to be a pivot. There's reason behind everything. Moving averages, Fibonacci, and resistance, pivots, support. I don't have time to explain all of that, but there's reason behind all of this. Most people don't know why. They just do it. But there's a reason behind on every single thing that I do. Every single thing I put. Like every single like moving average. There's a reason why it does what it does. But anyway. It's fascinating to me because not only I see this thing happening over and over again like this, you know, market goes up, market comes down, and then market is very clever. It's very creative at the same time. So we all know Mark Twain, right? Market does not repeat, it rhymes. Everybody likes to recite that, everybody likes to share that, whatever, right? But they don't know how to apply it. So market, here, I'm going to show you this. Here's another chart here on the Nasdaq. This is Q's weekly. Market does not repeat, it rhymes. That is so true because look at these scenarios. All three cases, they are not the same. But it rhymed. It didn't repeat, it rhymed. Do you understand? Do you even see this? But I want you to think to yourself right now, what was people saying? What do you think people were saying if social media was prevalent at the time? I don't think it was. There was social media in 2012, I believe. Was there? I believe there was, right? But it wasn't like more prevalent like today, I don't think. What do you think people were saying over here? What do you think they were saying? Here, like they're not seeing, they're not seeing, this is, okay, I'm going to see if I can block it. Like, don't look at all this, okay? Just know that this didn't happen, right? Just all they're seeing is this red, like this, like here. See, this is what you see, right? That's all you. What do you think people? What do you think people were saying back in 2012? What do you think? There probably something was going on. I don't remember. There probably something was going on. Some kind of pandemic, some kind of geopolitical issue, some kind of Fed is doing something. Something is happening. I don't know what. Some kind of news blowing out of proportion. CNBC and all these people, you know, because CNBC's job is get your attention, right? They're not investors. They make money off of your viewership. So they're gonna pump something. They're gonna hype up something. So you keep coming and watch them. What do you think they were saying here? What do you think like Twitter people were saying when this thing came down, like down here? Okay. And then here, I remember 2016-17. This is prior to the Trump taking the office. I remember what people were saying 2017. I remember when this was happening. People were calling it, you know, the topping pattern. People are saying that it's going to be worse than 2008. People are talking about how we're on a Titanic. This is going to burst. We're on a tech bubble. I remember in 2018, 2016 lows and stuff, people are saying that I was the only bull left. I did my videos in 2016, why I believe the market is going to thrive. And then, like, I remember almost every single comment was all bearish. You know, just sometimes vulgar. Do you know why I turn off comments on YouTube videos? Because all you guys are cowards. If you really want to say something, you wouldn't say anything like that in my face. If you don't know me in real life, behind your stupid keyboard, right? Behind your stupid keyboard, you like to say stupid shit. And I don't have time for that bullshit, right? So that's why I turn off my comments. And if you want to comment, you can always come to 2K Kim on Twitter and comment to me. You don't have to do it on YouTube, but people on YouTube are stupid. People are just dumb. It's a pollution in my ear. I don't want to read it. That's why it's off. I don't want to hear it. I don't need your comments. You can go ahead and unfollow me if you don't like that. Anyway. People think I'm a YouTuber or something. People think like I have to do this or something like that, right? But anyway, what do you think people are saying 2017? Here. Lots of things, right? And then here comes 2020. Let's talk about this again. People are saying that I was only bull left. Sure thing now. People are saying that I was only bull left here. People are saying that I was only... Oh, 2 best years I've had is when people told me that I was only bull left because I wrote that and I wrote this. Same comments I get too. I get same replies. Okay, what gets me is not the fact that that you guys reply to me with the concerning concerning opinion about the market, because how fast the market comes down. And I get it. We're all we worry. We all worry, of course. I'm not mocking your fearfulness or nothing like that. Like, what one of my biggest pet peeves is all of a sudden people who are like just on board bullish, all of a sudden at the lows, now they know what. Yeah, okay. Yeah, I don't know, man. Yeah, I think because of this. Now they're expert. All of a sudden they're experts. Oh my gosh, they're experts now. Before they're like, oh yeah, I'm with you, okay, man. Yeah, it's cool. Yeah, I think so. I think you're right, blah. But now all of a sudden it's like, yeah, I don't know, because of this, because of that. Yeah, I think because we might have a recession here. Yeah. Yep. I think we're gonna have a recession here. Yeah, because this is different than last time, Kay. It's different than 2017 and 2012. It's different. Yeah, if the coronavirus, man, if it goes to New York, yeah, oh no, yeah, no, man. Recession come, yeah, man. It's gonna come, right? Trust me, people. I heard the same shit in 2016, 17, 2012, no, because I wasn't on Twitter 2012. Same shit. And I say this with all due, with respect, but if you're so concerned, why didn't you say this before pullback? Because coronavirus isn't something new that we just had to deal with. It's been around for several months. How many months now we've been talking about that? See, when the market was going up, despite the fact that we had a coronavirus event going on, none of you replied to me and said, "Okay, I'm kind of concerned," right? None of you did. Even when we see a big pullback on Monday and Tuesday, none of you replied anything. And then when it gets steeper and steeper and steeper, all of a sudden, I always say, you guys remember, did I ever tell you guys about PBP? Right? It's my acronym that I made up. PBP is a patience breaking point. Traders pay. We all have a PBP, patience breaking point. I think I told you guys about this, right? We all have PBP. Patience breaking point. All traders, right? All traders have their level of PBP. What I mean by this, market is market fools the majority, right? 90% of market, 90% traders get wiped out in the market. Only top 10% can survive in the market and be successful over time. Only few will ever find it, right? So there's PBP. All traders, investors have a patience breaking point level. Do you guys ever play, like, I don't know, fighting games? You know, when you select a character, right? Let's say you're playing Street Fighter, right? You select. I used to love Street Fighter. Ryu, you select Ryu, and then they tell you like strength, right? The character's strength, speed, it's power, energy, all that. So all of us also have that. There's a patience breaking point like meter. Some is very high, some is very low. Most people are in between. Some people who are well seasoned in the market, somebody who's done very, very well in the long term, like somebody like Warren Buffett, right? And others. They have a very high patience breaking, meaning they are extremely, extremely patient. So like 12% move like this aren't going to really do much in their breaking point. But most new traders who just coming into the market, and a lot of new traders, a lot of millennials that are coming into the market now. The problem with the millennials is because they really never learn to grow their patience, right? They really never learn to grow their patience. The reason being is because they were born. I mean, I'm a late millennial, right? I'm a borderline millennial, but I've grown. I was young when there was no cell phones. I know when there was no screens, right? So I grew up when there was no cell phones. I grew up when there was no screens everywhere. Now we're screens, so we can get information very, very fast. And whatever you need, you can just go and ask Google. You can go at Amazon, buy whatever you need whenever you want. Now with the 1-day shipping, next day shipping from Amazon with Prime, you get everything fast. I remember though, when I was growing up, it wasn't like that. I would have to, if I want to obtain information, I have to call my mother, I have to call my uncle, I have to talk to my friends, trying to figure out what I can do with this problem that I have or the product that I need to get. Where can I do? And you ask people around, right? And it took time to obtain information or product or service or whatever, right? Now, no. You don't need anybody. You just search online, you get it. So because you've been in that state, a lot of millennials and Generation Zs, when they're growing up, they didn't know how to grow their patient level. So their patience breaking point is very, very low. That's why most new traders that come into the market is very, very short term. But somebody like Warren Buffett, the stock market is a device for transferring money from the impatient to the patient. Somebody like this guy, his patience breaking point is probably very, very high. This is why he was able to achieve what he achieved. Very high. While the newcomers' patience breaking point is very, very low. What I'm getting at with this, there's a reason why all of a sudden we start to really speed up the selling point, right? Selling pressures start to really, speed up. All these guys' patience breaking point is breaking. They had it. They can't. They're done. Then they done. Patience breaking broken. It's broken. It's done. Can't take it anymore. They're out. They can't hold on anymore. All right. That's why 90% of retail traders were gone here. They waited out. They chased it here. So do you know what happened? Most people, they have not made money for years. Happened here, happened here, happened there, happened there. So 20% corrections, steep pullback. 15%, we got 15 here, 15 there. This one actually didn't pull back, but we consolidated through time. But even, oh my God. You see, now you look at this and say, well, okay, yeah, 2017 doesn't look that bad. Really? You say that now. Do you know what really happened in 2000? You don't even know what happened, like what the sentiment was like in late 2016, early 2000. You don't even know what people are saying down here, man. See, don't be saying this shit to me because, oh yeah, no, because it has got it's not a new information. You see, it's not fresh to us. You've been trained this way to kind of disregard the old news, and then you get all like pumped up and hyped up with the new news. Same thing happens, man, because you've been you know why you've been trained? Think about it. Like the people when you're growing up, when you're a teenager, when you're in college or early 20s, you disregard all the old fashion, all the old music, movies, right? You think that if we listen to old movies, you're old person. You're not cool, man. You're not cool. You're not cool because you listen to old music. I like listening to new music, top 10 music, KDWB. Well, you guys probably don't know what KDWB is. Minneapolis KDWB is like the pop, the new pop, whatever. So right? You grew up in that middle school, junior high, high school, college. You cool, man, because I wear like the most up to date trendy stuff. You're old. You're not cool because you dress like the old people, the old trend. Yeah. So you've been learned, trained, conditioned to be hyped up with the current trend, current news. That's what is provoking you. Don't you understand? But trust me, this, same up and down shenanigan bullcrap the market does. If anything, it's just buy. And that's a buy. And that's a buy. You say, man, K, I wish I had the money. Then I would have bought that dip in 2012, bro. I would have made big money. Bro, I wish I knew what I knew now. Man, I would have bought these dips so heavy, bro. Like here and here and here. I'll be a millionaire by now. You see, people always say that. But when that actually happens, they don't do it. Because they're scared. And I've been saying this for years, right? Not years, maybe for months. That when the real dip actually happens, you ain't going to be buying. I've been saying this for pretty much the entire year of 2019. And then, well, late 2019, early, January and February, right? Right? You guys remember saying that? When the dip actually occurs, none of you is dare to even buy that because you'd be scared. Okay, you wish you bought here? You wish you could have bought there? You didn't because you're scared because you're, listening to CNBC and all that stuff and, people say the crash, the recession. Because whatever at that moment, 2012, 2017, whatever the moment at that moment, whatever was happening, whatever issue was going on in the market or in the economy or whatever the CNBC is pumping out, well, you're scared. Is there anybody out there wish you can buy 2012 and 2017? Here's your chance. Here's your chance. I'm not convincing anybody to buy anything because I don't know. I mean, nobody knows where the market is going. What I'm saying, as far as the probability is concerned, is this a good level to buy? When we look at this historical pattern here, make your own comment or decision. Because I bought it though. I bought it already. I didn't mean to. I actually thought that this video was going to be short. Like, I think I can figure this out, in 30 minutes or so, 20 minutes. But I guess it's going a little longer. But hey, this Saturday afternoon, I got a million things I could be doing. Hang out with friends, go out, go to hit up some nice restaurants, lunch spot. There are many million things I can be doing. Do you know how much work I have to put in to make this work, right? I truly hope that you guys appreciate it. There's just, because there's so many informations out there nowadays on YouTube and Twitter, and you just take these things for granted. You really do. You really take these things for granted. Appreciate someone where the appreciation is due. And I feel like I'm like saying this because I want to get appreciated by you, but just even in life, in your own life, if somebody's doing something well to you, show them appreciation. Because I got a lot of things I could be doing right now. I'm doing this for you guys. I don't get sent from you, right? This is a free video. I don't get a cent from you guys. I'm doing it all for free. Anyway, so I'm gonna do a little quick exercise. I don't know how quick it's gonna be, but I think it's gonna be quick. Quick exercise that what I'm gonna do is after market plunges 20%, that's the variable, right? And market makes new all-time high. This is S&P 500. I actually screened this on Friday midday. So what I'm trying to figure out, what did market do after market plunges 20% and then makes new all-time high? I'm going to say this. There has never been, not once in the history of stock market where the large index like S&P, Dow, or Nasdaq corrects 20% and then it goes on to make new all-time highs and then market crashes and get into recession or bear market. There has never been. I'm not saying just because there's never been that it's impossible. What I'm saying is there's very, very, very low probability. It's very rare that it's gonna all of a sudden come down and make bear market, get into a bear market or recession. There has never been. If the bear market was gonna start, we go 20, we pull back, makes lower high, and we do this a couple times, and then boom. That's how we get into recession. Lower highs and lower lows, right? That's how usually bear market starts. We continue to make lower highs and lower lows. There has never, I'm going to say this again, there has never been, never in the history of stock market where there's 20% correction and market makes new all-time highs and then come straight down, and get into a bear market. Never. So we're going to go back. We're going to look at S&P 500 index. I want to look at every single time when we saw 20% correction. It has to match this scenario. And it goes all-time high, and then it pulls back. I want to see what happens afterwards. That's what we're going to do. That's the exercise we're going to do. And whatever the far down my charting software allows me to go, that's what I've done, okay? So this is today, obviously, right? This is Friday. Friday close, we got a little bit up higher. But that's that. We got up. I did a little fib analysis here, right? From the peak, the low, it got to the 50%, right? And I want you to kind of remember this because we're going to come back to it. We're going to talk about it again, and we're going to compare with something. This is 2012, right? 2012 or 2011, we did see 20% correction, as you can see here. And then market did make new all-time high. I mean, it was a little smaller one compared to today. We got a little bit higher, but I think that's why the decline was much, much faster because it went higher before another kind of a pullback. But similar, right? 20% correction. Market did make all-time high, and then it pulled back to where? So I did a fib, same thing here to here, and we got near to that 50%. Not quite got there, but 50%. But this is quite a bit of pullback. That would stir you up, right? Think about this. If this is today, don't worry about what's happening here. But let's say this is today, and this was 2019 or late 2018, and then we made a move, and let's just say this is today. And coronavirus is happening today, and let's just look at this right here. That's just today. What do you think the media is going to say on this pullback? The coronavirus, right? If this is a coronavirus, it's a coronavirus. That's why it's pulling back. If it's Ebola, it's an Ebola virus. That's why it's pulling back. If it's interest rate, whatever, then that's that. If it's a China deal, then it's that. If it's some bombing somewhere, that's that. So they're just gonna put in that story into the price section so that they can tell you that that's why we're pulling back, right? You'd be pretty concerned. That's pretty steep pullback. I mean, look at that. We already seen this pullback, and we briefly made new highs, and probably a lot of bears are saying that's a mother of all trap, right? We didn't do that. Pull back, got up, pull another back. But eventually, market did continue to cultivate higher lows and higher highs. What is the definition of option? Higher highs and higher lows, right? So that's kind of what it did, right? We made a higher high, pull back, higher low. Obviously, this looks much scarier than that, only because it came down much faster, but it's pretty similar. But remember, this thing, today we went up higher though. But if you can look at it that way, definitely we still have, right? Higher lows and higher highs formation. We don't know where the lows is yet. But definitely we want to give benefit of the doubt to the buyers. Huh. Interesting, right? Let's go here. This is 1998. This is the last time we saw 20%. That's a 22%. Pretty quickly we got up, and I don't even have to put a fib here because we pretty much just kind of held that. But can you imagine what people are saying here and here and here? Looks like what a head and shoulder formation. We saw 20%, but we never really saw big decline. And this is a reason why sometimes, you know, we hold above it and continue higher, but sometimes we just see pullback. That's that. And then here. So this one is back in 1990s. We did see 20% correction. Actually, this one's very similar to, kind of similar to, you know, today's price action just a little bit. For the fact that I think I remember I even mentioning this chart in late 2018, December of 2018, when I was calling the bottom there, because yeah, I think I did. You guys remember? You guys remember me mentioning it? Because this looked a lot like 2018 December lows, because you said there's a low, and then that made a lower low, and this thing plunged, right? Very similar to what we saw here. Low, lower low, plunged, right? 2009, late 2018, 2019, and here, plunged, and then got up, right? But this one also kind of held it. We never really breached it, right? We never breached it. We just kind of held that level. We kept going higher. And there's one last one. I think this is one what everybody's talking. This is 1987 Black Monday. 1987 Black Monday. This is when we saw 36% correction. That's a heavy correction. So what I'm saying with this is, okay, even with this kind of pullback, that's kind of decline, we actually made a higher high, right? That's a high, and that's a higher high. We plunged 20%. That's 1990. But if I do a fib here, right, that's there, and then measure it all the way here, guess where it came down to precisely? The 50%. I actually think we have a very, very similar sentiment as today. The percentages are different, but I think they're pretty identical as far as sentiment is concerned. So you can see very steep decline, and just the fear that we had in late December, and then we saw another steep decline, 12%. This is 12%. So right now we hit right at that 50%, measuring here to here, right? And that's a pretty steep decline. Going back to 1987, you can see market made new highs. We saw pretty much V-shaped higher, V-shaped reversal. It just took its time to get there. We plunged precisely to peak. I mean, that if you just forget about you seeing here this, excuse me. Forget about, you know, how would you feel? Like, forget about all this here. Oh, you're still very fearful, aren't you? I mean, you're very fresh in your memory what happened in 1987, and then we did recover. It's old news now. It did recover, and then we see another plunge. Kind of like today, we did see a huge decline. Everybody, when they got up, like, oh my God, we're the danger's out, right? Danger's finally out, and then it sees another huge decline. Do you guys know what happened after this decline? What the market did in 1990s? Do you guys remember? After these two pullbacks, that's what I call gatekeepers. Gatekeepers are there to make sure a very few people will participate in a big move that is about to come. 1990. You know what? 1990 to 2000, we had the biggest bubble ever. People thought back in 1990s, 1987, market is way up too much. It ain't gonna go any higher. If you actually measure, if you actually bought Nasdaq shares here, let's say you buy one share of QQQQ. I mean, I think I said too many Qs. QQQ, one share. You bought it near the lows and you held it for 13 years. Do you know what your gain is? 1,500%. 1,500% in 13 years. That's what you call secular bull market. Do you know if you bought one share of QQQQ at the top of 2000 and you held it 13 years, you're negative. So you got to understand when to be long. Do you want to be long in a secular bull market, or do you want to be long in a secular bear market? Because if you long in a secular bear market, you hold 13 years, you break even, you barely make anything. I'll give you another fact. You can go ahead and check yourself. You're a very, very unlucky, stupid person. So you decided you're going to go all in on Qs. Just the day before this massive 36%. So you put your entire net worth, or all the cash you can get, put it on QQQ. And you bought all the shares. And right away, you're down. But you tell yourself, I'm going to hold this at least 10 years. You just told yourself that. But you're very stupid, you're very dumb, and you're very unlucky. You just bought it right at the top. But you're like, you know what, I'm going to be long. 10 years. Right away, your drawdown is like 30. I think Nasdaq only did like the 30% drawdown, I think. I think it was only 30%. S&P did more. Nasdaq did less. So you down 30%, which isn't bad. Which isn't bad at all. You know that? That's the thing what people don't understand. I mean, do you know what Warren Buffett said? Unless you can watch your stock holding decline by 50% without becoming panic stricken, you should not be in the stock market. All you people out there just freaking out because your stock is down 30, 40%, you're stupid. Anyway, so this person, right? This person's like, I'm going to put all my money on QQQQ, everything, right? I'm going to put like, let's say this guy was like, okay, I'm going to put 100 grand. Let's do a math. 100 grand. I'm going to put 100 grand right before. I mean, he didn't know. But I'm going to hold at least 10 years on QQQQ. And I'm going to hold at least 10 years, right? Right away, his drawdown is 30% on the Nasdaq, 30%. So now his account is at 70K, which isn't bad at all. Not bad. I mean, if you for some people who save their entire life, it took them, I don't know, maybe 10 years to get 100K in their savings account, I don't know. To lose 30 grand in just within months, it hurts. It definitely hurts because it took you lifetime to accumulate that, and in just freaking like the month, like it's gone. 30 grand, 30% gone. But you tell yourself, you know what? I'm just gonna wait. So you just wait. You waited 13 years. Nasdaq gained 1,000%. 1,000. Measuring from the top before, right, before the Black Monday, or the peak, 1,000% from 1987 to 2000 peak, 1,000. So 100K times 100%, 1,000%. This guy is now up 1.1 million in 13 years. He started with 100K. That's how you make money, right? That's how Warren Buffett made money. I mean, Warren Buffett still practicing compound growth. Compound growth. So his net worth jumps like crazy in his 50s. Most of his net worth came in late age because this guy don't understand how to make money in the market. All you guys out there, man, every day like trading here, scalping here, scalping there, shorting here. I'm gonna go long and short. You know. 100K, 1.41 million. But you people thought you're stupid. You're dumb. You're dumb. Yeah. You're very unlucky, so you bought it right the day before the Black Monday. What I'm trying to get at with this is that you have to understand when to be long in the market. You want to be long in a secular bull market. We're in a secular bull market. And if we're in a secular bull market, many times these levels are leveled by the day. And I'm not saying this is exactly where the bottom is. The thing about that is people like always want to see like the exact bottom. If it goes down one more day, they're freaking out. Oh my God, K said this was support. Next day, market getting down a lot. That's how... We're talking about years of investing here, and you worried about next day. That's poverty mentality. Wealthy mentality always look at the long term. Poverty mentality always look at the short term, because they always worry about rent money and beer money. There's a reason why your employer, wherever you're working at, your employer, your business owner, your CEO makes 100,000 times more than you do, and your CEO doesn't even show up for work every day. Because he risked everything, and he sacrificed his short-term gains. Do you know this? You trade for your time to get a guaranteed cash. You work, they'll give you guaranteed cash. But when this CEO or this business owner first built your company, he didn't get paid for the first 5 years. Well, because he was paying you first. That's sacrificing short-term gains for long-term gain. That's poverty mentality versus wealthy mentality. That is reason why most people are broke and Warren Buffett is where he's at. And none of you guys understand these kind of things because all you worry about is what's going to happen today and tomorrow. And you're so scared that you're down 20, 30, 40%. One last one, I let you guys go with this. This indicator just kind of measures the overbought and the selling pressure, right? This is 55% crash we saw in 2009. Would you buy it here? There's a 20% decline in 2012. Would you buy it here? There's a 15% decline in 2018. Would you buy it here? There's 20% decline in 2019. I showed you this chart in 2019. You guys remember this? Would you buy it? Would you buy it here? We got 12% decline. We got 12. But look at that pressure. It's crazy. It's like bigger than this one. That means that's way overshot it. That's extremely extreme fear and extreme hype. You know what I mean? In a bearish way, extreme hype. And you know what happens when there's extreme hype, especially in a secular bull market, especially when we're still in an uptrend. Would you buy it here? 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 That's it for me today. I've done a more extensive analysis for my members. This is the analysis I've done actually on Friday. Yeah, last night. It's a 2-hour video. Very extensive, comprehensive. We cover a lot today, but what we cover is actually only, probably about 20% of what I covered in this video for my members. And so you can be fully aware what to expect and all that comprehensive video. And also, I've been accumulating this week. And so if you've been thinking about it to join Traders Club, feel free to email me. I don't have any kind of link or anything like that. You can email me. Go to twotradersclub.com. There's a contact page. You can email me there, and then I can send you if you're willing to want to sign up, and I'll give you information what positions that I'm in this week, and going forward, when I'm going to be adding more, what kind, I'm trading options, also leaps, what is the strike price, what's the level to buy, maybe buy more, what are stocks that I'm buying, what are stocks that I bought this week, which options did I buy this week, what are the targets, and there will be ongoing updates so I can fully guide you on the next move up to the upside. I actually think this is a good opportunity because if you missed out to go buy the dip here and here and here, I think this is a great opportunity. It's just gonna give you another opportunity before this thing actually makes a move. Again, I'm not saying that I know for sure. No, nobody knows for sure, but I just think that we have a high probability. And so I'm just gonna help to guide you through this move and see if we can benefit from this overly hyped move, right? And so and you also get access to this video, and there are other videos, but this will be a very new video that I've done yesterday. It's a 2-hour video, very comprehensive, like really expounded on how to deal with this matter and where the market is going, what's next targets, and all of that. And is there any kind of signal that recession might be coming? And I'm putting all together fundamental, technical, psychological analysis, so you'll be fully aware. Because if you understand, you won't fear. And you might be thinking, like, how the hell can you be, what I'm saying? How the hell can you be this confident when we just see 12% plunge in just 1 week? Because I understand the psychological aspect of this market. Not only that, the secular trend of things. And in this video, I put everything together so you can understand also. So I think I can do, 2020, right? 2020 February, I can do 20% off on my membership, Investor Premier VIP. So you can go to my website and check it out. If you are willing to do it by this end of this year, not end of this weekend, so we'll end the promo until Saturday, so tomorrow night, right? Can you email me if you're interested, and I can send you the special link, and you can sign up with the 20% decline, or 20% decline, 20% sale to sign up for the membership. So if not, that's totally cool too. You can continue to follow me on Twitter and YouTube, and I thank you for your good communication, things like that. And I know some of the languages were a little bit heavy and intense. It's only because I wanted you to learn. Because we're at war every day, and when I see you going into the mine, I'm not gonna be like, "Hey Steve, can you please get out of there?" I'm not gonna say it like that. Yo, get the fuck. You know what I'm saying? Like, I'm not gonna. So the language has been a little bit more intense today because I understand the scenario that we're in today, right? So I have a respect for all you guys. You know what I'm saying? I when I say poverty mentality, like wealthy, I'm not like knocking down the poor. I was the poor. I was a janitor for the first 7 years in my 20s. And we ended up building that business, and I became a CEO of that company now. It's one of the fastest growing, building maintenance company here in Twin Cities, but I came from that. And there's the reason, when I said that your CEO makes 1,000 times more than you do, and he doesn't even work, I'm telling you by experience, hands-on experience. When we first started the company, we did not get paid. Because I'm paying all my vendors first, I'm paying all my employees first, I have to buy all the equipment, you know what I'm saying? Like, yeah. But after a while, we got paid. They got paid way more than employees. So I want you to always thinking in that sense. You know what I mean? Don't worry, sacrifice short-term gains for long-term gain. Truly build wealth how Warren Buffett has done over time. This is a great time to do it. It's a great time to do it. You guys have a wonderful weekend. Talk to you next time.